Hey guys, welcome back. This is Matt from Zen and the Art of Trading. Got a very interesting market analysis video for you guys this morning. As you can see, there's been some pretty major developments in the Forex markets and the global markets in general. This coronavirus seems to be creating a bit of mischief for many countries at the moment, and that's starting to take a toll, starting to manifest its own symptoms in the markets, which is very interesting to see. I've never really traded through a prolonged epidemic situation like this, and it's fascinating to see how the market responds to it. Let's get straight into this video today. I don't have a lot of time this morning to do this, unfortunately. I'm a bit busy today, but I want to do my best to get this out there for you guys. As usual, remember this isn't a signal service or anything like that. This is just my personal opinion on the markets, and I can be wrong just as often as you guys are. The only difference is I have about 4 years experience now doing this stuff, and when I'm right, the market does tend to have very large moves, such as this one. If you remember a couple of weeks ago, I was saying how this zone down here was going to act as support on euro dollar. And you can see it sure did. We've had sorry, I nearly swore there. We've had a bloody 570 pip rally out of this zone. It's unbelievable. Never seen anything like this. And it's pretty exciting to see the volatility pick up in the markets after a couple of years of basically sideways movement. I'm sure there's a lot of traders out there making a lot of money on these moves. Unfortunately, I didn't get any entries on this particular pair according to my trading plan rules. I haven't finished backtesting my structure trading strategy yet, which is really unfortunate because one of the setups that I would take, or I plan to take, is this boy down here. This bullish engulfing candle, high, close, swing low out of a major structure level. If I'd finished testing my trading plan, this is a valid trade I would have taken on my live trading account, and I would have had a 1 ATR stop below this low, and I'd be trailing my stop loss on this move here. And you can see I've missed out on about an 11% gain on this move alone. That's just one move. When I go over to US yen later, you'll see that there's been multiple rallies like this. So last week I was saying that this pair was in a downtrend until we broke and closed above this high. And I was anticipating that happening, but I did say that I was expecting a pullback before then. Clearly we did not get a pullback. In fact, we haven't had a pullback at all on this daily time frame since this move started. And it's important to note that sometimes when these really strong moves occur in the markets, there is no pullback. The only way to take advantage of moves like this when they start to happen is on lower time frames. So in this case, even though the 1 hour chart is the only time frame where we got clear pullbacks, and there were multiple opportunities to take advantage of this market. We had multiple breakout situations, flag patterns, and the like. But I don't trade the 1 hour chart on this pair. I trade the 4 hour chart, and I didn't get any 4 hour setups that technically meet my rules. And of course, I regret not capturing some of this move, but it's more important to follow your rules in trading than to make money. Let me just say that straight up. If you break your rules and you make some money, it feels good in the moment, but the next time you break your rules, you're likely to lose money, because when you're breaking your rules, you're trading without an edge. You're trading without a verified, confirmed edge over the markets, and you're just trading by the seat of your pants. And it's not an encouraged way to trade, especially if you're an inexperienced trader, because the number one key to consistently profitable trading is in the name, and it's consistency. So yeah, anyway, it's a bit of a rant about what's been happening in the markets and how it's been affecting me. Obviously, I'm human as well, and I get FOMO just like the best of us. But the difference between a professional trader and an unprofessional trader is a professional trader doesn't act on the FOMO until they get a setup that meets their rules. And I've been hanging by the seat of my pants waiting for a setup that beats my rules, and I haven't got one yet, but that's okay. That happens. I had a winning trade last week on the pound against the Swiss franc. I had an advanced pattern play out profitably. And I made a bit of money on Australian dollar. So I'm happy with how my trading's been going so far. But yeah, would have obviously been nice to catch some of this move, but there's always next time. And it does look as though this move is going to continue. Surely we'll get a pullback soon, but I don't know when that's going to happen because we do have a lot of momentum in this market. But on the next pullback could provide a great opportunity to go long. We'll have to wait and see. But let me delete all of this analysis because it's no longer relevant. This market has taken out all of these highs, all these previous resistance levels. So we're now in a pretty strong bullish trend situation. We haven't had a 1, 2, 3 move or anything like that, but just because we've taken out so many key resistance zones, I'm classing this as a bullish market right now. I think you'd be crazy not to class this as bullish. So yeah, but the market will typically respond to structure levels, even when it is in a strong move like this. And so the question is, where is the next resistance level that's likely to act as resistance on this market? And the one that I see is up in this area here. So we've got this standalone level here that hasn't been tested for quite a few months looking left and even more months looking right. So this will be a key level to pay attention to when the market gets up here. And I say when, not if, because I'm pretty confident the market is going to get up there. It's just a matter of time at this stage. But this is the level I'll be paying attention to, the next resistance level. And we've got plenty of room to retrace a decent chunk of this market without invalidating the bullish nature of this pattern. We could come all the way down, whoops, not that one, this one. We could come all the way down into this structure zone down here. Why is that so bright? Must be from another video I did. Sorry about that. It's a bit better. We can come all the way down into this zone here. And if we can find support in here, it'd be a great place to be going long from. Even on this 4-hour chart, we have plenty of room to come down and test this zone, this previous resistance in this move without invalidating the trend. And we've got this 50-day EMA. I'm just curious to see. This indicator, by the way, is a higher time frame EMA. It's a 50-day EMA, not a 54-hour EMA. So let me quickly put on a 54-hour EMA. Just out of curiosity, I want to see how far we are from it on this time frame. As you can see, we're quite a way away even from this moving average. So we've got plenty of room to retrace, come back down into this structure zone and find support, especially if we find support in confluence with this 50 EMA. And then we could see another leg higher out of this market. Or of course, we could just continue going to the moon, as crypto traders like to say. It's unusual to see a Forex pair go to the moon, but that's what's happening right now on this euro dollar. And that's always possible, of course. We could just continue rocketing higher. We could even just take out this key level altogether because, as I mentioned at the start of the video, this is all being caused by rather unusual fundamental developments. The market gets a bit crazy, a bit irrational when there's a crisis. We've got a bust happening in oil. We've got the global markets, US stock markets having a rough time, hitting some rough weather. And all of that in confluence with the coronavirus paranoia can cause some pretty bizarre moves in these markets. There's a common saying that all professional traders are very fond of, and that is that the market can stay irrational longer than you can stay solvent. What that means is that this market can do whatever it wants, even though it seems crazy for it to continue higher and push through this structure zone. It could absolutely happen, and a lot of traders will lose a lot of money trying to fight that. So it's important to wait, see how the markets play out, wait for price action confirmation. In this case, if you're going to look to go short up here, I would look for a large wicked pin bar rejection candle, shooting star candle, or a double top. That's what I would be waiting for. I wouldn't just go short just because price pauses here, because we could have another situation like we had here. You see here, price rallied strongly from this support zone, the structure zone down here, came up into this, what I would consider a very, very major resistance zone. But instead of rolling over, if I drop down to a 4-hour chart, you can see we did have a struggle here, but we had a build-up. What I like to call what Rainer Tio, another professional YouTube trader that I really enjoy following, he calls this the build-up breakout, where price comes up into a resistance zone, does struggle at it, does pause and consolidate there, but you can see we have equal lows down here, squeezing into this structure zone. And then rather than just rolling over, we actually blew through it. And so we could have a similar situation occur up here. So it's very important to wait for price action confirmation. And also, you're not going to win every trade. So if you do get a valid short setup up here and the market doesn't reverse from here and it stops you out, that's normal. Remember that you can't be right all the time in trading. It's okay to be wrong. It's okay to take losses. Just make sure you're managing your risk, you're keeping your losses small, and then when you do eventually catch that large profitable move, you'll make up for your losses and some. That's the name of the game in trading. So yeah, not much more to say about this pair. We're in a very strong bullish move right now, obviously, and that's likely to continue until we get signs from price action that it's unlikely to continue. So now we just wait. If you're an intraday trader, there may be some trading opportunities to ride this market up into this resistance zone, but we are getting quite close to this zone. So the risk reward profile is definitely starting to skew towards the downside, but there's very strong momentum on this pair right now. You can see this 15-minute 50 EMAs acting as support on this market. We had a bit of funky price action in here, but it's still holding. So that's a sign of a very strong trend when these lower time frames are holding their moving averages. That's a very strong sign of momentum. So yeah, definitely would not be going short where the market is right now. I'd be waiting a little longer. Be patient. Wait to see how this market unfolds through the beginning of this week. If we test this zone and we have a double top or a large rejection candlestick pattern, could be a great shorting opportunity to capture a bit of relief out of this market as people begin to take profits and short traders pile in. And if that happens, then I'll be looking at this zone down here for support and potential long opportunities. And yeah, that's it for this market. And let's move on to the next pair, which is dollar yen. Look at this poor dollar yen. It's having a pretty rough couple of weeks here. I've never seen a move this strong in the markets. We've had a nearly 1,000 pip. We're nearly at 800 pip decline from the highs from this resistance zone. Again, just like euro dollar, I did point out that this zone was likely to act as resistance a couple of weeks ago, and it clearly did. It pushed this market all the way down to this standalone low here, the lowest point price has been since August of 2019. So quite a large move here. Pretty ridiculously large move, actually. Very rare to see this in the markets, in the Forex markets particularly. Maybe not in crypto, but in Forex, this is unusual. But anyway, I'm just pointing out the power of this structure and trend analysis by pointing out this structure level. If you'd gone short up here, and there was opportunities to go short, we had a bearish engulfing candle. We had a number of wicks up here. And if we drop down to a 1 hour chart, you can see we had a double top situation in here, or even a quadruple top. But it is a period of consolidation. Another way you could have traded this is to just wait for this lower trend line to break. You wait for a candle close below this minor lower trend line to show that the consolidation period is rolling over to the downside. So you could have gone short here with a 1 ATR stop above the highs, and you could have rode this market all the way down and captured quite a massive profit out of this move if you trailed your stop loss below lows. And again, if you go, I've got videos on my channel. I'll link them in the video description, but there's this particular video I'm thinking of. It teaches you how to read trend, and looking at this market on this time frame, there was no reason to exit your short trade. There still is no reason to exit your short trade according to how I read a trending market. This bearish trend on this 1 hour time frame is a textbook bullish bearish trend. And just really quickly, let me clear up some of this shit because it's looking a bit messy now. First of all, this is going to potentially act as resistance now, this structure zone, if we get back up into it. Delete these lines in these zones. I'll leave that one in. But the way I read trend is goes something like this. This is how I would read this market. So we had an impulsive move lower that took out these lows, putting us into a bearish 1, 2, 3 move. Once this happened, you could begin looking for short setups. Your bias could, on this time frame, your bias could flip to short over bullish. And then this market kept making lower highs and lower lows. So every time it takes out a low, we go into a trend continuation. I'm waiting to see how deep the pullback is. And wherever the highest point of the pullback is the last line of defense for the bearish trend. So until, once we get this break and close below this low, I'm waiting to see if price can come up and break and close above this previous high in the trend. If it can't do that, then I consider this bearish trend intact. And you can see here, this entire move, we haven't seen the previous high in the pullback taken out, not even once. So this bearish trend is in fact intact, and the only time I would be concerned about it is if we get a break and close above this swing high here. And until that happens, had I gone short from up here, I would be holding on to my position, and that's one way that you can capture massive profits out of the markets consistently without any fear of the market coming back to stop you out, because you know exactly what you're waiting for. You're waiting for a break and close above the swing high, and then you could simply trail your stop loss 1 ATR above these highs. And until this trailing stop gets hit, you just stay in the move. That's a bit of a side ramble, but I figure it's important to mention various ways you can take advantage of this analysis that I'm showing you. But anyway, let's have a quick look at this daily chart and determine where I personally think this market is likely to head next or stop next. And that's pretty much where the market is right now. I would class as a major support zone. So this swing low down here, this wick, typically can act as a major important level on price, just because it hasn't been tested looking left, well, since 2016, which is a pretty decent amount of time between this low being tested. And so this is an extreme level, and anyone who's short from up here, who is trailing their stop loss, may want to exit their position for a profit down here in anticipation of a really deep pullback here. And they may not want to surrender too much of their open profits, and so they may start to liquidate their short positions down here. And we may see a temporary relief rally out of this pair. If we do see a relief rally, I would imagine it will have a decent amount of pippage in it, for lack of a better word. And if we do find support down here, we may even see this market come all the way back up into this resistance zone before finding resistance and perhaps rolling over to double bottom down here or roll over into trend continuation. So that's what I'm expecting out of this market. I'm keeping an eye on this structure level down here. It could definitely act as support now that we've come down into it with such momentum. So these are the two resistance zones I'll be paying attention to if we do get a strong rally out of this zone. And I'll point out one more support zone that I'll be paying attention to if this one here does not hold. And it's pretty easy for me to see where I will be paying attention to that, and that's right down in here. Reason for that is 1, 2, 3, 4 tests of support. And actually we did have a couple of tests of resistance in here. So a nice test here of resistance. So this is a good example of a structure swap zone. And what that basically means is that it's acted as support and resistance in the past multiple times. So it's an important key level from both sides of the market. So let's move on to the next pair, which is pound dollar. And we, again, have had a very strong rally out of this structure zone that I pointed out last week. We are this is a choppy looking market. The trend is not clearly defined here. I would class this as consolidation, but that doesn't mean that there weren't trading opportunities here. So I said last week, if we don't get a close below this swing low here, then this market was likely to rally out of this zone. And that's exactly what happened. And we actually had an interesting opportunity here to act on this market. If you're a student or a follower of Stephen Hart's YouTube channel, which I have a link in the description if you're not, he talks a lot about this new strategy he's been working on called the 5-wick rejection strategy. And you can see this is right here is a great example of that setup. And the way it works is you draw a line across, you wait for the price action to get into an important zone of structure, such as this. This is a zone of major support looking left. If you draw a line across the bodies, what you're waiting for is 5 wicks that test below this line without a close below. So we've got 1 wick here, 2, 3, 4, and then this 5th wick here is your entry candle. So we had 5 rejection wicks from this structure zone down here. You could have gone long at the close of this candle with a 1 ATR stop loss below these lows, and you could be involved in this move right now from all the way down in the structure zone. We also had a pretty ugly double bottom down here, but a double bottom nonetheless. So there were multiple opportunities to take advantage of this zone of support down here. And that's one way we could have profited out of this analysis that I showed you last week. But let's talk about what's coming next. We now have broken and closed. Well, if this day closes higher than where it's at, then we have a break and close above previous resistance, a couple of previous resistance levels here, and this 50-day EMA, which is interesting. And so if we get a decent close above this high here in the coming day, then we could see this market, say we go a little higher and we close up here. If we get a pullback down into either of these highs, we could see a 1, 2, 3 move come out of this pair, this price action that is unfolding right now. So that's what I'm waiting to see on this market. If we do get that, then I'll be looking for long trades. My bias will shift to the long side. Right now it's neutral because we don't have an established trend, but we do have a bullish price action pattern developing, a bullish reversal pattern out of this zone on this daily time frame. So that's interesting to note. We did have a strong rally out of this support zone that is now taking out resistance levels, previous resistance levels, which is a sign that this market wants to head higher. And we could see that this week. Now, of course, we do have a couple of minor resistance levels to pay attention to. We've got this high in here and this high here that could act as resistance on the market. But it's given the weakness of the US dollar at the moment on these other pairs. In terms of correlation, I would expect, like, this British pair is having its own troubles at the moment. So that's why we're not seeing as big a move out of this as we are on the euro dollar. But that basically the weakness in the US dollar across the board is a sign to me that this pair may move decently higher this week, possibly up into this high up here. So this is the zone that I'll be paying most attention to. Basically, if I was long down here, or I get long from in here, and we get very bearish price action patterns on either of these highs, I may consider taking my profit off, but I'm not looking at these highs to initiate a short position. Up here would be a good level to pay attention to for short positions. The only trouble with this zone up here is that we have this huge wick right here that tests all the way up, pretty much 3/4 of the way up to this next resistance zone up here, which is this standalone resistance level here that's been tested a couple of times as resistance. This would be a tricky zone to go short from. But yeah, again, we've got this huge wick up here and this candle body on this 4-hour time frame. So not ideal. That's not ideal for a structure zone, because you're just not sure where this market's going to reverse from. It could reverse from the high of this wick or the bodies or somewhere in between. And so it's pretty difficult to determine where to put your stop loss, because if you're going to put your stop loss above this swing high, then it's going to ruin your risk reward ratio pretty much. If we get up here, I wouldn't be comfortable having such a wide profit target and stop loss, because it's just not how I trade. But yeah, that's for you to decide according to your own trading plan. But basically, this week could provide some great long opportunities. That's more what I'm stalking out of this pair, is riding it up into this resistance zone. So if I get a decent any pullback trades on this 4-hour time frame that meet my rules, I'll be happy to take long trades up into this resistance zone. So that's what I'm stalking this week on this pair. My bias is bullish on this pair. If we get a breaking, if this candle closes above this swing high in here, then my bias is bullish on this pair. On the 4-hour time frame, I'll be stalking pullback trades. So that's it for this pair. That's all I have to say. Let's move on to the next pair, which is good old Australian dollar. Last week, I did take a short trade 2 weeks ago on this pair, capturing this trend continuation move lower. And I told you guys last week that I took my position off all the way down here on these wicks, which you can see was a wise decision, or not a wise decision, because it met my trading rules. It was just simply a decision that met my trading rules. And it just happened to be a wise decision, because the market did rally out of this support zone, and had I held on to my position, I would have been stopped out for no profit. And so I did make a decent little profit out of this swing, out of this trend continuation move on this time frame. And I'll just play a clip from last week explaining why I did that, and then we'll come back and we will continue with this analysis. I'll tell you what I'm expecting out of this pair this week. So I'm probably going to take off my second target on this trade right where price is right now. I'll explain why. So first of all, we're testing a major structure level that hasn't been tested since 2008, 2009. And you can see that we had this large wick rejection off this zone, and price did close above it. And if I drop down to the 1-hour chart,
or even the 15-minute chart, this will paint a clearer picture. So we had this impulsive move lower, retracement up into these previous lows, and then another move lower, and then a retracement, and then another move lower. And then after this move lower here, we immediately retraced this move. We pulled back, we made a low, and then we broke and closed above these previous highs, creating a 1, 2, 3 move. And last Friday we closed up here, and then we've just opened all the way down here. We've had quite a large gap lower, and oftentimes these gaps get filled by price. So right now I'm actually expecting this low in here to act as support and push this market all the way back up to fill this gap. The problem with this is, if that happens, then there's a very real chance that price could retrace this move and come all the way higher and create another 1, 2, 3 move, which on this lower time frame would put us into a bullish trend. Until we break and close below this wick in here, we have a valid 1, 2, 3 potential reversal pattern on this 15-minute chart at this major structure zone, which is the reason why I'm paying such close attention to this story right now. Normally I would ignore a move like this if it were happening in the middle of nowhere. But this happens to be a very important structure zone that this is occurring in. So that's why I'm paying extra close attention to it. And in fact, let me just close my position out right now. And so I was paying very close attention to this low down here. If price could not close below this low, then it's unlikely that this trend was going to continue lower. We were likely to enter a period of consolidation. And given the context of this market, I was not comfortable holding my position any longer if this low was not closed below. And then the market went into trend continuation from here. We had this pullback down into this low that did not close below it. And then we had a break and close above this high. And then we struggled at previous support on this on the higher time frames here. This pushed the market lower and we had a pullback, but this pullback did not break and close below this low. And in fact, we ended up having a break and close above this high. And then once this happened, you can see we came down to test it, but we did not break and close below it. And then we had a nice strong rally out of this zone. And so, yeah, that's the power of reading trend. Again, in the description, I have a lesson on how I do this, so you can master the skill for yourself. It's a very important skill to master. And I'll just delete all this because it's no longer relevant. But we're now entering a period of consolidation as we're approaching previous resistance on this higher time frame, on this daily chart. So I am expecting this market to roll over from where it's at. We may head a little bit higher up into this low here or this previous structure zone. But I would expect this market to move lower from here. Even though the US dollar is weak at the moment, the Australian dollar clearly has its own problems. And so I'm not expecting a trend reversal anytime soon. Of course, it's possible that we get that, but I'm not expecting that, especially not this week. So keep an eye on this zone for potential short trading opportunities to capture a trend continuation move or just a nice impulsive move out of this zone. And if we do get that, we're probably going to come down and test this previous support zone in here. The market likes to repeat itself, just like me. And so these are the two levels I'm paying attention to this week. So again, if I just draw out the trend on this time frame before we move on to the next pair, we've got this daily chart trend here. And you can see that we have a series of lower highs and lower lows. We came up, we had a little bit of a rally out of this support zone, but not very convincing. And then we just rolled over straight through it. And so where the market is now, if we get a break and close above these highs in here, then we could have a potential bullish trend reversal on our hands. But given we've got a lot of trouble areas to get through before that happens, we've got to deal with these previous lows, this previous support in trend, which previous support often becomes resistance. I'm sure you've heard that saying before. You should have if you've been trading for any period of time. And this 50-day EMA, once a market begins trending like this 50 EMA can become quite a powerful influence on price as well. And so this is coming down into this zone in confluence with this zone. So there's a lot of reasons to be bearish on this pair as we move up into this zone. And that's what I am. I'm bearish on this pair until we get a break and close above this high and this 50 EMA. I'm bearish on this pair. My bias is bearish. My intraday bias is bearish, and I'm looking for bearish setups on the 4-hour chart. I hope that made sense. If not, as always, just leave questions in the comment section. I'll get back to you as soon as I can. But let's move on to the next pair, which is dollar Canadian. Now, this thing is on a tear, which is interesting to note because we've had US dollar weakness on some pairs, on the euro dollar and the dollar yen. But on this dollar Canadian, we have quite impressive strength. So that's interesting to note. What that means is that the Canadian dollar is having a worse time than the US dollar right now. And there's many reasons for that, but I'm not going to go into them in this video because they're relevant to technical trading, or at least the way that I trade the technicals. I ignore the fundamentals. I'm interested in the fundamentals. I find them interesting, but I don't let them factor into my trading decisions too much because it's a bit hard to be consistent. And with the fundamentals, if you're using them to inform your trading decisions, it's not as simple as it seems. It becomes a active game theory. And what I mean by that is you're not predicting what the fundamentals will be. You're not even predicting the reaction to the fundamentals. What you're predicting is the reaction to the reaction that people have about the fundamentals. So it gets a bit confusing. And so I prefer to stay away from it. I just trade historical chart patterns that have proven to give me an edge over the markets. I just stick to that. It's simple, it's effective, and that's how I like to trade. But anyway, last week I said that these previous highs in here were likely to act as support on this market. And that's exactly what we got. We had this reaction from this structure zone up here that I pointed out. We had this large wick rejection from this zone. So a lot of profit taking here and some shorts piled in. They pushed the market lower from this zone down into previous resistance in this trending market. And from this previous resistance, we have since had a pretty impressive rally. So just another example of the power of trend analysis combined with structure analysis. That's all I pay attention to, structure and trend, and lower time frame price action patterns for confirmation of trading setups. And it's quite effective, as you can see. So on this 4-hour time frame, we came down into this zone, and yet again, this pair, I have not finished backtesting this pair in my structure and in my structure strategy, and so I was unable to take advantage of this setup in here, this reaction from this zone. But I'm pretty eager now to get my backtesting finished so that I can start taking these damn trades, because I missed out on a significant amount of profit this year from not being able to act on these setups. And yeah, that's a shame, but it's part of the trading. It's part of the process. It's important to complete your backtesting process before you start trading, putting your live money at risk. And so I made the right decision here, even though I'm missing out on these big moves. Members of Stephen Hart's training program, a lot of you guys may have been able to take this setup. I know I got an email from Stephen pointing out this structure-based setup, and I know that he personally is involved in this move. And so, yeah, for you EAP members, this was a great structure zone to trade from. And I'm sure any of you guys that caught this move are pretty stoked with how the market opened this morning. And we did have quite a large gap up. Look at the size of this gap. Now, that's a pretty ridiculous sized gap. I'm not really sure what caused this, to be honest. I've got a feeling it may have something to do with oil, because oil is having a rough time right now. There's been some large moves in oil over the weekend. A bit of volatility's picked up over there. And I know that the Canadian economy is heavily influenced by oil developments and price action. And yeah, so we had a 120 pip gap up on this pair. So anyone who was short in here is probably suffering this morning, because, you know, if you were to have gone short on these highs for whatever reason, and you had a 180R stop loss above the highs, yeah, this market has gapped up many multiples of your stop loss. Some traders may have been slammed by slippage this morning. It is quite unusual for markets to gap up that aggressively, but very profitable for anyone who's been capturing these moves. But anyway, this market is approaching what I would consider a important resistance zone. And that's this standalone zone up here. The reason that this is important, even though it hasn't been tested multiple times, it has been tested once as resistance
we had a little bit of a hold in here, but I wouldn't really count that as support since we didn't have a impulsive move out of there. But we did consolidate above this level, and we did have one test of resistance here. This bounce out of here. So this level up here is going to be an important price action zone of resistance, potentially. And so that's the zone I'll be paying attention to when this market gets up into this zone. It's very likely that we could see some sort of bearish relief out of there. And likewise, now that we've broken and closed above these highs here, then this zone down here is an important price action support zone. Any pullbacks into this zone could provide some great trend continuation opportunities. So that's about all I have to say on this pair. Alternatively, if we come lower, then this zone down here obviously could act as support as well. So they're the two zones that I'd be paying attention to this week. So that's it. Very bullish on this pair till we get up here, and I'll be stalking bullish trend continuation opportunities. So that brings me to the end of today's analysis video. It was a little bit longer than I anticipated making it, but there was a lot to talk about today. It's going to be a very interesting week this week in the Forex markets. So if you're an active trader, make sure you're managing your risk. Make sure you're adapting your position sizes according to the volatility. And obviously, if you're using the ATR indicator to set your stop loss, which I would highly recommend, the ATR will adapt to the volatility. So we have quite a high reading on the ATR right now, which means that your stop losses in terms of pips should be significantly wider than they have been over the previous year. And that's it for today. Thank you for your time and good luck with your trading this week. I'll see you in the next video. I've got a lot more content on the way, so hit that subscribe button if you're enjoying this stuff. And thank you for your support. I really do appreciate it. I'm looking forward to continuing this journey with you guys. And I am most looking forward to growing together and becoming better traders together. I hope I can help you guys become better traders, and hopefully through your feedback and your support, I can become a better trader myself. Good luck out there. Be safe. I'll see you in the next video. Thanks, guys and girls. Take care. And so just after finishing that video, literally a few minutes later, it's still rendering in the background. I'm going to tack this onto the end of it probably, but we've just had a flash crash on the Australian dollar. Pretty significant move. Several hundred pips. I'm not really sure what's caused this. I am opening up the Forex market. There's no news this week, so there's no reason for this move. Very unusual to see this. Yeah, I'm not sure what to make of it, but this is extremely bizarre market behavior. We've had 300 pips of movement today. We definitely rolled over from where I said we were probably going to roll over. I was right about that. I certainly wasn't expecting it to happen within a 15-minute period, that's for sure. So yeah, be careful out there this week, guys. There's very strange moves unfolding, very strange weather in these markets. So be safe. Be very cautious if you're opening positions. It's going to be a wild one. Have fun, everyone. I'll see you next week.